All right, guys, welcome to the live session. All right, now I know the frequency of the live sessions is not as often, just been quite busy, but yes, I'm still here. We're still going for it. So I won't waste any time. Let's get into this. So, I mean, since the last time I spoke to you guys, we had a really good breakdown analysis, and the dollar's really been pushing pretty nicely low. And it's very interesting to see how the price has recovered the way it has. Now, the quantitative tapering effect, as you can see from this bullish dollar movement, has really taken effect, and we've gone all the way from $99 to $105, which I knew was going to happen. I know for those of you saying the dollar's going down the dumps, I already knew that the price is not going to do that, even though we know the dollar's already dying, but this is the last attempt from the dollar to really make it count. So as in, we're going to get this last very strong bullish dollar before prices really change direction. Now, when we spoke last time, we had a look at what we had here. Now, this was all we needed to know. Let me just drag this a little bit further. This movement here, when the body of the candle closed outside of this weekly supply zone, was all we needed to know for us to get a very good piece of intel to know that we're going to have a very strong bullish dollar. And as you can see, as the days have proceeded, it has continued on. Now, I'm not getting away from this analysis. I still believe in this pullback here that's going to happen at some point. You know, after a very strong bullish movement, if we look from, the week starting the 16th of July, until now, every single week has been a blue week. So it's just been gains all the way through. So at some point, there needs to be a sort of pullback. Now, ideally, we have the NFP news next week. So the best bets are that we probably are going to see the pullback that I'm talking about, most likely next week. The reason being is pretty simple maths. That's going to be a very high volatility week. There's a lot of high impact news that can push the price, back down to this 104 area before it takes off again. And that will complete the cycle of price in this area. Now, at the moment, we're looking at the price action. The price didn't actually reach with the previous interest rate news, the target, which is for the price to come back to this weekly validation point over here, and then take this low specifically and then go for a long. Now, I still expect it to happen. Now, for me, I believe the trigger most likely will probably be a new high formed inside of this area here at 106. And because this is a supply order block that's been around since last year, there will be a strong level of supply liquidity here because this was the facilitator for the drop from this point down to where we are. This range right here is the supply liquidity driving it, started from 106. So for the price to get back to 106, something like this, wouldn't surprise me at all if the price actually makes a move from there. So doing something like this and pulling back would be the perfect kind of structure we can go for. Now, I'm going for ideals, but this is not the only way the price can, do what it needs to do. Another aspect that we can take a look at here is that the high of the year, or the previous high of the year, the price has gone above the high of the year quite cleanly right now. Now, because the week hasn't closed yet, there's a lot of assumptions that at the moment with this analysis, we're making different hypotheses of what the price could do. Now, with one postulation here, if the wick of the candle closes above this high, not the body, then we can get this reversal starting going from this week onwards. If the body of the candle closes above this yearly high or yearly high, previous yearly high right here, then what we can do now, I'll put some markings here so that we can have a little bit of clarity of what's going on. So this is previous, I'm going to use a term called ATH, which is all-time high of 2023. Let me make it a bit more clearer than that. So let's put 2023 over here. So this is the previous all-time high for 2023. Right down here is our weekly validation point. So I guess for the ICT people, you guys will call this the FVG. So weekly validation point right here. I'll put FVG so that you guys, you don't even need it. Okay. So what I'm talking about here. So what I'm looking for is for the price to return back down here and then proceed to go for a long. So for me, price entering into this supply order block would be an ideal area for the price to actually find selling pressure enough to return here. Now, this structure here, when the price breaks out of a previous sort of supply order block, is going to be matched up with some sort of return back into the order block to, in essence, mitigate the people who have sold when they're supposed to be buying, get them to break even, and then the price will return the other way. Okay, or close to break even. That's the kind of structure that happens. Now, without going into that much detail, this is the structure that I'm expecting the price to follow through. Now, if I was to go by hypothesis, the two high probability areas that we can go for is either the price to enter into this supply order block already and then reverse, or if we have a weekly closure here, this would be great. Now, if we look at the price on lower timeframes, we can figure out what the price is going to do pretty quickly. So if I go over to the weekly time frame over here, let's just take a look at what we've got. And then we go to the daily time frame. So at the moment on the daily time frame, that target place I'm looking for, if you want to know where that is, it's over here. If I was to draw, if we were to look at this on the lower time frames to kind of, now this line will look really big, even though I've made it smaller. So we'll go to the daily time frame. Now that's my alarm. So just give me a second, guys. Let me switch that off. It's just a trade alert for me. So I've got a trade going on. Give me 1 second. There you go. 1 second. I've got a trade alert. Just turn it off so that it doesn't disturb you guys. All right. So yeah, in essence, what we're looking for here is we want the price to give us some sort of directional bias for and the daily time frame is good enough to be able to do something like that. So setting up, based on that standpoint, it would be good to see, what the price is going to do, from the angle of, the price action that we get in this week. Now, for me, we have a few different options, like of what to do. And I think for me, I'm just looking really for whatever the price can offer us from a standpoint of continuation trading. And what I mean by that is that before I actually do the analysis, if the price gives us a continuation trade or continuation entries, then we have it made for us. We'll be good to go. The price what we've got going on there would be good enough for us to be able to proceed for looking for continuation buy trades. That's what we really want to be looking for. Okay. So to have that set up, go for us, we need to, of course, put ourselves in a position where we can actually set ourselves up to take these kind of movements. So just give me a second. Let me do this for you. So if I go over here, I want to do something. Here you go. So if I go over to the daily time frame for us to look at where we are now, the target area of this place I was speaking about is the weekly low. So is this weekly high, sorry, right over here. If I go to the H4, the weekly high is this high right here that we're looking at. And you can see where the price hasn't reached here, but we have a plethora of lows that have been created along this area. So beneath this area here, there will be a lot of liquidity going on. Now, with the news that came out, another thing that I want to kind of point to you guys, if I just draw this order block here, is that the price has left the liquidity gap, at least on my charts. Now, for some people I've been speaking to, they don't have this gap, but on Hugo's way, it shows that when the news came out, which was the interest rate decision news, the price left the liquidity gap that is yet to fill. Now, adding to what we already have as a theory of the price actually pulling back short for a bit before proceeding for a long, is not surprising to me at all that we actually have a situation like this where the price has actually got a very big and obvious liquidity gap. But of course, when it's big and obvious, if you do see it on your chart, the price will move as far away from it as possible to kind of take away that sense of the price wanting to go for, a move like this. So if the price is actually going to do this, it would be great to see. Now, on the daily time frame, depending on how the price closes today, this might even be an initiation factor to go for a short. Because again, out of the two probabilities of the price going short, which there are two high probabilities, but the highest would be the price entering into the supply zone. Where the price is right now, we have a daily candle sitting on top of the high, and then we've had this reaction over here. If the price is kind enough, we may actually be able to get a short kicking off from here. Now, it's not the highest probability short, don't get me wrong, but it also can work as well. That would be another option that the price can give us in terms of what we're looking for a trade. So I wouldn't put it past the price to not give us something of that nature where we can take an opportunity of that sort. So bearing that in mind, all right, I would say we should keep an eye out for what the price has to offer to us when it comes to today. Now, I'd be real with myself on the days like this. Usually we don't have reversals. Sometimes we do, but it's not really a all the time thing. Sometimes we just have, a very good maybe trade session, and then after that, the price kind of dissipates. But on Wednesday onwards, we see these kind of nice reversals where the price really, really gives us some like nice solid moves. So that's kind of what I'm actually looking for in terms of a trade. And I'd be really grateful if the price can give us something like that, because we can definitely work with that for sure. All right. So this is my idea of what I'm looking for when it comes to setting up some trades here. I would like to see the price offer that to us. So anyway, with the dollar index here, at the moment, the price has, yes, taken a high broken market structure down here. So we could get like a some sort of reversal. If it happens today, it happens today. We have this buy order aggregate, which is a definite extra sign, apart from this liquidity gap, that the price is going to reverse soon. It's just a matter of when. So hopefully what I want to do is see if I can put myself in a position where we can take a look at how the price, builds, and then take it from there. Now, just to zoom out to the monthly really quickly, if we look at the supply order block from the monthly that we've been working with, if the body of the candle closes above this supply order block, can you see on the monthly time frame the same weekly validation point, or FVG, whichever one you want to call it? When the price comes back down here, it would be the same kind of FVG situation as well. So it gives us a really good sign that we are most likely going to stay above here. Now, because the NFPs is in the month of October, right? And this monthly candle is going to end this week, basically on Friday. This will be the last monthly candle for the week. Then it kind of sets us up in a nice position, because ideally, this point right here where the price is going to give us a short from would make sense and align on the weekly and the monthly timeframes, because we're going to need both the monthly and the weekly to pull back into this same kind of range before it takes off to continue to fill this next liquidity void at 109 and then take the high and continue. So it gives us more definiteness that taking that scheme of things, or looking from that angle, between now and Friday, the price is going to stay above this area. So that means even if we were to get some sort of shorting action, the price is not going to get beneath this area here before the 30th. That's my postulation. The price is most likely going to continue in the long direction. And surprise, surprise, if that's to happen, then that means we'll have some continuation trades. So I'm actually looking for a long rather than a short, just because of this monthly kind of dynamic here, because time and price are directly proportional to each other. I want you to always remember that. So what I mean by this, and this as well, so I can keep this, but time and price are directly proportional to each other in what I call it the time and price matrix when it comes to the markets. All right, there are certain times and price action points that are important, and certain closes and opens that are important, and we can see evidence of that from how the price reacts at certain times and etc. But in the time and price matrix that I call it and how I see it, looking at this monthly time frame here, for us to actually get a clear break above this area. So if I was to draw this monthly zone here, the body of the candle would have to close above this monthly area for us to get a continuation, which is pretty very clear that the price is going to do in the next couple of days. For that to happen, we'll have to wait until the end of this month for this candle to close. So we can postulate that between the 26th, so today, until the 29th, which is Friday, price is not going to give us any bearishness enough to return back here without the body of the candle closing above. In fact, it may even push further. So using a monthly time frame and then coupling that with a weekly time frame where we're looking specifically at the highest probability area, which is this supply order block right here, it gives us the postulation that most likely the price isn't going to fill this gap down here yet, or go for the buy order aggregate, but it's going to rather push further along. Now, there's not that many pips left. There's only 66 pips, which translates into, several different types of pip amounts for different, major pairs, for example. But in this example that we have here, because of what the price is doing and looking at the theory, it makes sense that the price will most likely reach this 106 point first before it comes back down anyway. And so the reversal will probably kick off from next week. That will give us the big short all the way down, fill this gap, take the low, and then we're ready to rock again. So from 106 down to 104. All right. So with that kind of concept in mind there, what I would suggest then is that I'm actually looking for a continuation long. So I'm going to ignore, even though I know the price has taken the previous day's high broken structure and is pulling back into the supply order block. If it does sell off, that's fine. There's nothing wrong with it selling off, but I'm still going to be looking for a long just for this short term, because now that I have this now, in essence, if you want to think of it this way, even if it does go for a short, anything above this blue area until where the price currently is and to the high is our playing field right now for this week. As long as the price doesn't close back inside of here, which I highly doubt it will not. There isn't even news for that kind of move to happen. We have a playing field here where we can capture long or short movements, depending on what the price does. Because again, this 106 price point that I'm talking about, the price may even continue that into next week and then begin to go for a short. There are many different ways to get to the same kind of price goal here. But what I do see is that looking at how the price behaved on Monday, right? We had a very strong close above the high over here, very, very strong close. So I expect a continuation the next day. Now, even though the price has kind of dipped slightly, it's still inside of this trading range, very much so in the upper, third of this range. So it wouldn't be a surprise to me that the price, continues to go long. Now, for a continuation trade, it will be simple, quite simple. All I'm going to use now, because we have this weekly high set up here, which is the yearly high. Now, the yearly high is actually 105, 497. I've got 503. So I'm going to make it exactly accurate. 105, 497. So it was almost at, 105.5 point, but it didn't reach that far. So this 105, 497, when I superimpose this onto the chart here, and then I'm going to come to how we use this to trade, major pairs. Let me just take this over here. So right here, if I was to stretch this out for the low, all right, give me a second, drink some water. All right, so stretching this out for the low over here, what we've got going on, the price actually, now every single price point is a reference to, especially highs and lows, specifically in opens and closes, they are reference points that how the market algorithms operate in terms of dealing with price. You can believe if you want to or not, but there's a lot of evidence that supports this. Now, on that standpoint, right, the price over here, if we look at this candle here, when the price was taken off for this bullish movement, the low that was created here closed just above this price point, and so did this low today. So we have a kind of dynamic form of equal lows or close to equal lows that the price hasn't gone for, and it's not really evident, from here. So my postulation right now is that tomorrow, even though it seems to be in a pretty random place, the price is probably going to go and take the low of today, which will also take this little low here. Now, this low is not a swing low, so Don't get me wrong, it's not like a very spectacular low or important low in that sense, right? But it is a low that can really get the job done in some regards. So if the price comes back down here, I'll actually be looking for the price to continue long. And my targets really would be to 106 right here, which is about 78 pips or 80 pips, right? 80 or something pips. Now, if you remember the ratio we did with the calculation, for my good students who have been following me, then you know that Euro USD on average has a 1 to 1.3 ratio with the US dollar index. So for every 1 pip the dollar index moves, the US Euro USD moves 1.3 pips. That's what it's been so far. Of course, it can always change, but that means we're looking for about 100 pips on Euro USD, probably for a short right now. Now, if you look at where Euro USD is at the moment, okay, as of today, you can see that it has exactly the same structure as the dollar index, but just in the opposite direction. We have this low being taken by a previous low. We have the break above and then the return. If you look at the dollar index on the H1, you can see it's the exact same structure, just in the opposite way. So we have very strong dollar themes that are running through the price right now. So this would be a great time to trade the dollar index. Now, just like I said with the gap that we've got down on the downside here, when the dollar index took off to stay, we also have a very big gap left behind on the upside when the price sold off here. So I definitely think the price would want to fill it at some point. Now, the setup for this with what we've got going on with Euro USD, right now, the thing is, and this is where, of course, you know, I'm still keeping tabs on what the price is doing. We are in a very strong optimal area of demand and liquidity to actually push the price where it needs to go. Now, for me, for the price to trigger any sort of long, I think we're going to need a weekly induction. I think we need to see the weekly lows taken in such a way that will trigger some sort of buying opportunity. If that doesn't happen, then I wouldn't want to step in. I'd rather look for a continuation short and maybe expect, in this case, these long-standing lows that we've been seeing from February and March to be taken. That could make sense, and you know, we can get something going on. And also even the low of the year, which is at the beginning, was in the first week of the year, you have the lowest point of the year going on with Euro USD. So there's quite a few options to go for when it comes to what the price could do and the range that it could operate from. Really, it's just going to be about, you know, picking out good opportunities and sifting through the bad ones, of course, and try and sift out the opportunities that can produce some really good results for us. Okay. Now, if I go over to other pairs, let's have a look and see what else we've got. Now, I'm sticking to major pairs at the moment. This week, I actually haven't picked out what my main pair is I'm looking at. The pair that I'm actually trading is actually AUD JPY, something completely outside of this framework of, you know, dollar index pairs. But that's what's just been really doing it for me. I really like the pair a lot, so I've been rocking with that. I just like it personally. But yeah, I mean, we can take a look at other pairs now. AUD/USD, not really my favorite right now. I know it's going to go for a short and it's basically almost accumulating, but I just don't like, for me personally, the movement at the moment is just not for me. All right, NZD/USD, a little bit more lively. We had a nice little movement today on the buy side. USD/JPY, again, another great pair that I'm waiting for the price to give us a short on still, but it hasn't done so as of yet. But I guess, you know, even speaking about that, I think right now, when I'm looking at the pairs, the major pairs are, even though there are potential good opportunities, I still don't think I like the way that they are moving. I don't think they're moving in the place that I would like them to be, where I can actually take a trade on. So I guess that's why I'm trading AUD/JPY. Okay, so I won't come up with an analysis just yet because I don't like the way that they look at the moment. I'm sure if I really went for it, we could find trades in between, but the dollar index, really, I'd like to see what it does tomorrow. Okay, and there's nothing wrong with not taking a trade, you know, or not analyzing yet because you're waiting for something else. For me, I think it's set in stone for me personally. I'm an intra-market analyst. I always like to look at other markets because money or Forex is the market of money, which everything is built upon. For you to buy stocks, you need money. For you to trade futures, you need money. For you to take a loan, money has to be given or loaned out. So every market is tied to the forex market in that sense. And so intra-market analysis, especially for things like the dollar index, are very crucial and handy tools that you can use in your arsenal to make your trading experience and your analysis more potent and your hypothesis more accurate. So this is just, for me, my kind of viewpoint on, when it comes to building out a trade setup and stuff like that. So for me, having this in mind, I want to look at other pairs. Now, the US 30 is of interest to me as well. The US 30 is coming to a very interesting area of price action. I've been enjoying the US 30, especially my trading bot that I wrote the code for has been doing pretty well. My students have profit. People who have bought access to it are using it and it's doing them good as well. I'm interested, to see what we might get over with the dollar index going forward and with the US 30. Now, the dollar index and the US 30, they have an opposite pair correlation. When the dollar gains strength, okay, which means Euro USD and etc. goes short, the US 30 also goes short as well. If you want to think of the US 30 in another way to help you with the correlation, I'm going to write it here. If you see the US 30 as the US 30 USD, all right, the USD part makes, now because we have the dollar price on the right-hand side, it's the quote currency. Okay, whenever you see the over here on the right, on the vertical scale, we have the dollar here, or dollar prices. This is the dollar price. So the US dollar is the quote currency in this equation. So if it's the quote currency, it means it's paired against the dollar, even though it is the dollar. I know it sounds funny to say, but it's just how it is. So from that standpoint, it means whenever the dollar index is pushing in value or going up in value, then the US 30 will be going short, okay, as it is right now. So if the dollar index continues in that manner, then the US 30 will continue dropping. And if it does continue dropping, then there's a very good opportunity for a very strong break beneath this area here. There's a big liquidity void that ends down here at 330 or let's just call it $33,000, right? And apparently the price is here in this important area. Now, you can still go long from here, don't get it wrong, because that would be also great, equally great. But if it breaks beneath here, we can get this 3,300 and even maybe lower, so like 32,500. That would be great to see. Now, I've always had it in my mind that the dollar index has got a big short incoming, which is going to be triggered definitely by the dollar's increase in strength. Now, to zoom out and explain to you why I think that is looking at the price action from 2020, which is the last major swing. We have an equilibrium order block here, which is a demand zone, and we have these lows here that never returned into demand before pushing long. So the price is really running on fumes here, which is why it's not able to make a new high. We have this high here, which triggered a reversal. This movement down here broke the structure. So market structure break is over here. You can even take this swing low to use this to see market structure break over here. And so right now, whilst the US 30 is shorting, what it's really doing is just come back into the supply order block and it's selling off. So really, I'm a proponent for the sell side of the US 30. And if this is the stage where it's really begun, then we should be just looking for literal buy trades all over sell trades all over the place, because it's about to get serious. But my only thing is, I do think that there is room where the price is probably going to buy up maybe one more time. We have a liquidity gap here, and we have a couple of highs and the supply order block that's missing. So we might get like a short-term long situation, possibly. Another thing is, and I know this is, looking at where the price is right now is a little bit far-fetched, but it could actually happen, is I need to go up a little bit further to get this. Let's see if I can do it from here. All right, let's just use the D1 to do it. So on the D1 here, it's not so easy to see, but we have a liquidity gap that has been left behind and the market hasn't put it on. So there's a liquidity gap here at 35. On the H4, you may not see it as well, but there is a liquidity gap here on the market open. Maybe the H1, here we go. So you see this little gap here, guys. I know it's small, but there is a gap here. It still counts as a liquidity gap that hasn't been filled out. And I was actually looking for the price to do it back in these months in August. When I saw the price getting back up to these points, I thought, okay, it's going to do it, especially over here. This is what I was looking for. But the price really didn't have that in mind, to do. It's left it alone. So I'm guessing that once the US 30 does drop, maybe it might reuse that and recover and fill it at another date or point. Or we're going to see the price just completely reverse and do it. Really, a question of seeing what happens there really with that. Now, my thing is anyway, I expect something to happen in the US 30, whether it's a long or a short. It's just the dependent factor would be on how the price behaves. Now, we have these equal lows here, which is, I was in the US 30, I made a bit of profit off of it from the long here, but I found that the US 30 keeps kind of backtracking on its steps, even though it took the low, and it's because these equal lows are very nearby and the market is going to gun for these at some point soon. So basically, I see this as a point where the price would want to take this low here. Once the price takes these equal lows, how it behaves after that would be a helpful determinant to know what to do. Now, because this market opened with a gap and it's visible on all of the different brokers that I use 4 different ones, then they all have the same gap. I know at some point we're going to get a long. So that's going to be a little cheeky scalp that I can, grab. So I'm hoping that maybe when the price takes these equal lows, the price actually may reverse even today and give us this little long here. And I'll probably be out just above this high and then let the price swing back down again. But I'm just really waiting for these lows to be taken. So that's kind of like my setups at the moment. The last thing I'll do before I leave here is, gold, our precious gold over here. Now, gold has been on a nice little drop. And if you caught it from when the new NFP news came out and you've been in since that point, what a banger of a trade it's been. But anyway, we all know that there's a very big and obvious gap on gold that hasn't been filled for a very long time. They've kind of teased us with it. Prices come down here. They even came down even lower, but still no filling of the gap. Now, I think that this gap fill needs to be done in line with the dollar index's strength, and it probably will be. But of course, it can happen without it as well. It doesn't actually have to. All right. Now, at the moment, with what gold has done so far, let's start from the weekly here. I think that gold is going to give us one hell of a short one more time. And I also would say silver is the same. Now, with silver, guys, listen, this is the last opportunity to get silver. One day, guys, silver is going to be worth more than gold. So, and silver's price is being purposely suppressed. So I'm giving a little financial tip here. If you want to lock in wealth, right, when you get profit from trading or whatever you do, guys, start buying silver as much as possible and don't hold it in a safe because it might not be there when it's time to withdraw it. Keep it somewhere safe. Plan it with your wife, your missus, your fiance, whatever, and buy some silver, guys. I would suggest silver coins instead of silver bars because you get bullion tax on those silver bars and you have to pay 40%, which is not really nice. So stack up on the coins, guys, as much as you can. All right. And just get them ordered to you. All right. So with that being said, anyway, at the moment, the price has dropped into this order block here, and we've had a slight reaction from, gold on that. But again, I still think it's not enough really for a trade at the moment. When I look at the daily structure, the price is really wanting to push most likely slightly lower. On the H4 time frame, the price is already closed way beneath the weekly low, which is last week's low over here, and is looking like it probably will take the low of the previous week before that also. So I would like to see now, there's a very large order block on the H4 that, should be characteristic here that guys should all be aware of, and is this one right here. So based on the order flow, because this large order block is supporting buying pressure, the only thing is let's do a quick mental analysis here. So we have this swing low here. The price attempted to return back into the order block and left the inefficiency here. So when the price came back in here, this is why there wasn't really much time to think. As soon as the first H4 candle came in here, the second one was on its way and we had this large movement. Problem is though, if we take the first swing high, which is this swing high right here, and we look at what the price did from this swing high, and then we go down to this lowest one, we have a higher low structure from this order block, which is suggestive of the fact that this demand order block doesn't have as much liquidity as it originally had. It doesn't have the strength to push the price past here, because if you understand supply and demand theory and trend theory, then you should know that if the price returned in here, then this swing high, the body of the candle should have closed above this high, which would have been an indication that there's still very much so strong demand buying pressure in this market. But seeing that the price actually pushed up here, it took this high, which of course is great because this high would have definitely had some buy stop liquidity above it, definitely for sure. And this is why the price, the price doesn't just stop at highs and lows for no reason. There's always a reason behind it. So whatever stop losses and buy stop and also, things of that nature were there. That was the perfect opportunity, of course, to allow the price to give us, what we're seeing now. So, bearing that in mind anyway, price got here from the news and we've had a strong drop since. All right, very, very sharp drop. Now, my thing is, there's only a few options. Now, this order block is large and of course there's liquidity in here. It's just that the price at the moment has failed to make a new higher high and it's come back into now with order flow and order block flow. The price, the demand zone here would be projecting or be leaning off of the liquidity from this larger one. So if I draw this demand zone here and we look at how the price is reacting, the reaction is not that great. It's not really that strong. It's not really that violent or strong. We have a few spikes here and there, but nothing major. Okay. So my thing is I would like to see, maybe we might actually get gold giving us a slight pullback. Maybe it might touch back at this high and then go for a short, but nothing major just as of yet. And this is what's making me think that the price may actually decide to even push further and maybe even just get to the low of August right here. Because I mean, if you look at the higher time frame, we can see the bearish structure here already going on. Candles look like they clearly want to push to the bearish side of things. Any bullish pressure that we've had in this month has been swallowed up, not almost immediately, but close to immediately. All right, so I think the price is still bearish. Okay, still bearish. All right, so this is what we've got going on over here. And I'd like to see what the price, actually does afterwards. And you can see, look, the US 30 is already kind of pushed down short. Yeah, so I would say that we should kind of figure out what the price is doing, at later dates and take our time to wait for the price to give us a clearer signal. Okay, so for now, I think I've given you guys a good breakdown of what I'm looking at. Now, in terms of cross pairs, I'll just explain why I'm in AUD JPY. If you want to take the trade at the next available entry, you can go for it. It's dropping right now. So if I quickly go through the analysis, I gave it to the Academy students here. So on the daily time frame, I saw this really nice structure here where the price took the high of the previous month, right? And then we had this seemingly weird movement, which isn't actually weird, but we've had a break of market structure right here. We have these candles here, which came and took some lows. Now, on the daily time frame, you don't really see it because what I was actually looking for was a swing lows over here. Now, on my charts, we actually have a swing low here, but that doesn't show on Hugo's way. That's absolutely fine. But anyway, we had this fast breakdown, broke market structure. We've had a return into this supply order block, which will be the return for a sell. And simply, I've been selling ever since then. Now, if I go over to the H1 here, let's get the H1. This was the trigger for the movement today, right? We've had the market structure break here. And what the price has actually done is just literally returned back into the same order block here. This is why the price is so potently strong. And I'm expecting AUD JPY to continue selling for quite a while. All right. Now, my target for AUD JPY is very far from here. I'm actually expecting the price to really give us like a bad boy move down about 300 pips. That's what I'm looking for. But we'll have to see what the price offers. Okay. There are many ways to get into this. Now, on some of my accounts that I've got, I've actually missed the entry. On my main accounts, I have got the entry going right now. So far, so good. But on some of my accounts, I actually missed the entry. So Unfortunately for us, I'm going to have to find another alternative to get in. But nonetheless, it was really good. Now, the reason I just got back in and I went quiet for a while is because I'll show you what I was looking for an entry. So looking at the price and just doing a quick analysis here, if we look at the order flow on the 15-minute, we have this high being taken. And then if I was to just kind of zoom in here, you have this demand order block, price broke beneath it, returned with a wick, and it left a supply zone. But the thing is, as it was pushing short, it's left a plethora of highs, including this one right here. So what I was expecting in this US session is for the price to pull back up, run above this high, take out the buy stops here and enter into this order block, fill the efficiency and go for a short. And you can see the action has been literally astronomic in terms of the speed and, potency of the short there. So this is why I'm in that trade. And I think that's the only trade I'm going to hold on to for today. I don't see anything else. And I really had to search for AED Japanese yen. I literally, it was like on my 14th round of looking at pairs, this is what I came up with. And it served me well. Now, there's other pairs here that you could probably go for. Swiss franc, Japanese yen, and others. But I found AED JPY to just be the perfect balance for me. On that note, though, there is a trade on another pair that I was looking at. See if I can find it here for you guys. Wait me a second. All right, here we go. So NZD JPY, there's an alternative trade over here too. It's done the same kind of thing. It's just not as fast in reaction. Seems as though the Australian dollar is suffering more weakness than the New Zealand dollar at this stage in time. This could also work out. It's just that it's because the price isn't so vibrant here. It's a little bit of a scary one to want to jump in, right? So this is why I didn't go for that one. Okay. But yeah, this is really my trade setup for the day. That's the only trade I'm in. It's the only trade I want to stay in. And I think that's really it for me at the moment. If I find anything else, guys, you'll be the first to know. Now, it looks as though just before I go, that gold is actually waking up. So who knows? I still haven't seen a signature of something that's tradable. So even though it's pushing long right now and it's doing a few pips, I'm not going to be sucked in. I'm going to leave gold alone. I'm also going to leave the US 30 alone, because right now it's literally powering short with such a force that is to be reckoned with. So I'm leaving it alone for now. And yeah, in essence, you just let the price do what it needs to do. But so far, I'm kind of glad I came out of the US 30 today, because it wasn't really doing much. At the best, I was up 2K and then just kind of crashed down. So looking at this, I think I was glad that I looked at these equal lows. I guess I told you guys, equal lows are always something to pay attention to. Now, if we match that to the dollar index right now, quickly before I go, here you go. You see the dollar index is pushing up long, had this spike down and then push up. So it's reflected on the US 30 with this kind of aggressive heavy short now. Now, don't ignore that gap, because that gap is going to come in handy at some point. But for now, the US 30 is on a free fall. All right, so that was it for today, guys. I'll catch you tomorrow.